this exciting day where we talk about businesses all around the world. It's Business 360. My name is Blyden Okem. In Business 360 today, we'll look at the key features in the world of business. Some of the talking points in the world of business will be that of the commodity markets. We'll talk about the forex market, the state of the naira amid impending economic struggle, and the president's speech regarding the funding of businesses in the country. Social media platform formerly known as Twitter has threatened to sue a group of independent researchers whose research documented an increase in hate speech on the site since it was purchased last year by Elon Musk. A lawyer representing the social media site wrote to the Center for Countering and Countering Digital Hate, CCDH, on July 20th, threatening its finding seemed intended to harm Twitter's business by driving advertisers away from the platform with incendiary claims. So talking about businesses on the foreign scene. The big question is the US dollar's reserve status under challenges? The
rapid reversal of last year's strong US dollar rally, combined with efforts in China and elsewhere, while there may be discussions on the need for a new global reserve currency, a transition away from the dollar involves significant challenges and risks. The stability, confidence, and economic dominance associated with the dollar are truly unmatched at this point in history. The United States has a strong legal and institutional framework that fosters trust and confidence in the US dollars, with minimal impact on the value of the dollar. The transition from the dollar to another reserve currency would be a long, complex, and risky process. It would require a consensus among many nations and could lead to a period of global economic instability during any transition.
In Africa, half of Ghana's government's $7 billion debt to the country's central bank has been written off, and the remaining balance has been replaced with a 15-year bond with a reduced rate. Debt restructuring, a key step for Ghana's eligibility for a $3 billion IMF improvement from the Ghanaian point of view. In Kenya, as the Kenyan administration considers extending the SGR to Malaba in order to establish a connection with Uganda, all eyes are currently focused on President William Ruto. Kenya's SGR extension to Malaba is under scrutiny to commence construction on key railway projects, Malaba-Kampala SGR and Naivasha-Kisumu-Malaba SGR. But countries are pursuing individual financing. Now to the home scene in Nigeria. President Bola Tinubu on Monday said the federal government will spend some of structural transformation and improve productivity in the country. The president spoke in a broadcast to Nigerians. Good time to find out. Let's find out more from the president's speech.
The commencement of some taxes will provide the necessary buffers and headroom to businesses in manufacturing sector, capacity to expand and create good paying jobs. We are going to spend 75 billion between July 2023 and March 2024. Our to kickstart a sustainable economic growth, accelerated structural transformation, and improved productivity. Each of these 75 manufacturing enterprises will be able to access 1 billion credit at maximum of 12 months for working capital. Our administration recognizes the importance of micro, small, and medium-sized enterprises.
Now to Nigeria's external reserves. The country's external reserves lost $167.2 million in July as the naira fell for June 30, 2023 at $34.12 billion, fell to $33.95 billion as of July 28, 2023. In the past 2 weeks, the naira fell from 820 naira per dollar to 868 naira per dollar at the parallel market on Monday. Quite concerning from that angle, and decline upon decline. Also, about 7,000 additional filling stations across Nigeria into vehicles. According to reports, Asian manufacturers with conversion kits that convert vehicles that run on premium motor spirit, popularly called petrol, to use LPG, enhancing auto gas. More filling stations under the Petroleum Product Retail Outlets Owners Association of Nigeria, Petron, had registered for the same purpose as 7,000 Petron members were getting set to dispense auto and gas. Seemed to be a new future for the petroleum industry and a new future moving from PMS to auto gas. And the data releases for today, Tuesday, August 1st, 2023. Let's move to the calendar and see what the standings are this morning. According to economic calendar, as at 2:45 a.m., as highlighted with rate, the Kaizen Manufacturing PMI, which is the Purchasers Managers Index for July, came out in China. Previous standing for June, previous standing stood at 49.2. Previous standing stood at 50.5 index level, and the current standing is 49.2, going better or lower than the forecast of 50.1 index level. About 5:30 a.m. in the morning, the Reserve Bank of Australia came out with interest rate decision at 4.1%, keeping a decision stable at 4.1% following a previous standing which was at 4.1%, but forecasts indicated that interest rate could go higher to 4.35%, but is below that standing. Let's look at further in the day what the data across the world would be. As at 3 p.m., 46 index level. Also, job openings in the US would be expected to be out. Previously, job openings stood at 9.824 million. That is the concerns from the statistical point of view and the economic calendar. Let's talk about other details regarding the US. In the 1950s, 1960s, and 1970s, the US economy was driven by housing and manufacturing. Fast forward, and the modern economy of the 2020s is a service. CME Group Chief Economist Blueprint Knapp explains more regarding interest rates and the services concerns.
Relatively few, despite the fastest rise in interest rates since 1981, and an inverted yield curve where short-term rates are much higher than long-term bond yields, the U.S. has not experienced the recession forecasted by the vast majority of market pundits and economists, at least not yet. Why not? Relatively few contrarians that did not forecast a recession, including ourselves, had many reasons for their more optimistic view. However, the most critical reason appears to have been an appreciation of how the U.S. economy has changed over the decades, driven by housing and manufacturing. The only choice to finance a home was the 30-year fixed-rate mortgage, provided by a savings and loan institution that deliberately borrowed short-term from savers and lent long-term, taking considerable interest rate and yield curve risk. And there was no such thing as financial futures or interest rate swaps to allow for the efficient hedging of interest rate risk. Fast forward to the modern economy of the 2020s. The U.S. is a service sector driven economy, and services are considerably less sensitive to interest rate swings than housing and automobiles. Home mortgages come in every size and flavor, from floating rates to fixed rates. Mortgages are originated by specialists and then packaged and sold to pensions, endowments, and investors willing to take the risk. There are no savings and loan institutions. Financial futures, swaps, and options are available for efficient hedging and management of interest rate risk. In short, the U.S. economy does not dance to interest rates like it once did. Make no mistake, though, interest rate shifts have a profound impact on asset value, and a rise in rates does not automatically mean a recession is around.
Economy and interest rates. Now to Asia. Japan's unemployment rates. Japan's unemployment rate edged lower to 2.5% in June 2023 from 2.6% by 40,000 to 1.73 million, while employment grew by 190,000 to 67.55 million. The labor force increased by 140,000 to 69.27 million, while those detached from the labor force went down to 63.1% in June from 63% in the same month the previous year. A year earlier, the unemployment rate was at 2.6%. Meanwhile, the jobs to application ratio ticked lower to 1.3 in June from 1.31 in May, pointing to the lowest level since July 2022. In Africa, that's the lowest reading since May 2022 from 7.9% in June. The inflation has now returned to the central bank's preferred range of 2.5%. Food inflation slowed to single digits, 8.6%, the lowest since June 2021, against 10.3% in June. And prices for housing, water, electricity, gas, and other fuel also eased. On the other hand, transportation prices increased substantially in June after the government raised the VAT on all petroleum products to 16% from 8% from July 1st, while on a monthly basis, consumer prices increased 0.1%, with transportation prices soaring 3.5% in Kenya. It would be, according to the chart this morning, as at October 2022, inflation in Kenya stood at 9.6% before dropping to 9% January this year, moving slightly higher on February and 9.2% before dropping to 7.9% in April 2023. Amid all the concerns and the rallies and the struggles in Kenya and a hike in the petroleum prices, inflation showed that our prices of commodities are coming down and the currency in Kenya is stronger and stronger. Dollars per barrel this morning, hovering close to its highest level in 3 months as a prospect of tighter global supply performance since January 2022. Market geared up for an OPEC Plus meeting this week, where de facto leader Saudi Arabia is expected to extend its voluntary output cuts in May, the highest since August 2019. The report also indicated that U.S. gasoline demand jumped to 9.11 million barrels per day, the highest, citing stronger growth estimates in major economies. While talking about the energy market, let's quickly look at energy market commentary from Larry Shaver. The commentary this morning.
Including Saudi Arabia, expect to extend their voluntary cuts into the month of September, and also per Goldman Sachs global demand, perhaps some investors are thinking that maybe the Fed will get close to the end of boosting rates. That said, we get into the mid to late session, choppy price action into the close. We had a crack spread at a 9-month high, data including Chicago PMI, Dallas Fed down to negative 2.2%. Tanker tracking data per Bloomberg 4 weeks leading up to July 23rd drops to a 7-month low. Traders are awaiting tomorrow's ISM
market, metal and agricultural market quickly. The energy market this morning. The energy market has shown some negativity, but the volatility level is quite low. Crude oil, US crude is at $81 per barrel, dropping 0.54 points this morning. A negative slight decline of 0.29 points, a negative 0.35% drop. Other markets, the industrial market next. And see what the price of bitumen is this morning. 3,885 Chinese yuan per ton, gaining 37 points, a 0.96% appreciation. Cobalt dollars per ton is the price of lead. Tin has gone up by 60 points. Aluminium dropping this morning by 9 points. Silver, copper and the rest. Gold prices on a decline this morning by 7.6 points this morning. Market is moving quite fast. A negative 0.38% decline. Gold price is $1,956 per ounce for 3.5 point decline this morning, a negative 3% decline, and lithium no significant difference in the morning market. Now to the agricultural market, what the price of soybeans is this morning. Soybeans has dropped 2.25 points. $1,443 per bushel is the price of soybeans, and wheat prices dropping 7.3. And see what the price is for the euro against the US dollar is this morning, and what the shared perspective would be. And afterward, we see the price of naira against the dollar and the parallel market. The euro against the US dollar also struggling slightly this morning. 1.09 points is the mark for the pound. Also still struggling against the US dollar, negative 1.33% decline. Naira's perspective in the market then. What the value of Naira is in the importers and exporters market. Let's look at the US dollar against the Naira, and afterwards we'll also look at the state of things in the parallel market. The US dollar against the Naira is at 770 Naira to $1 at the opener of the month. Price on a year basis, it's been 85.14% gain for the dollar over the Naira. But the euro also struggles this morning. At the closure of yesterday's 0.46 points this morning, a negative 0.41% decline. For the pound against the Naira, it's a drop of negative 4.17 points. For the market this morning, dollar to Naira, current price is 875 Naira to $1. The struggle continues at the buying rate and selling rate, 865 Naira to $1. For the pound to Naira, it's 1,155 Naira to a euro at the buy. We set to draw the curtain in today's edition of Business 360. Bitcoin prices dropped 301 massive points. Many analysts think it's a decline this morning. For Ether has dropped 21 points this morning, 1,831 US dollar equaling 1 Ether. Commodities, and the struggle continues from the fiat currency to the cryptocurrency and of Business 360. Thank you for being a part of it. My name is Blyden Ukem.